Thank you, Bob. Thanks a lot. It's very interesting, and you know, I'm heartened to see the detail and have the VNI data explained so clearly to me. But I'll say that in Silicon Valley, if you don't see that VNI data presented to you in some PowerPoint chart once a week, something's desperately wrong, because every startup out there is saying, we have a new backhaul solution, 60 gigahertz to backhaul these towers. You're going to need it because, and then up goes your data. So you absolutely, we all see that, we go, yes, we know the Cisco data, we agree with it, and just show us your products, please. So thank you very much for that presentation. Next up, we have a panel discussion. So I believe we're going to change the structure and put some chairs up for us to have the discussion, right? Okay, good. So while we're doing that, I'll kind of frame what the panel is going to be about, and then I'll introduce the panelists, and hopefully we'll have it all set up and ready to go for you. We're going to talk about this general topic about investment in telecom. So for that, we have two distinguished panelists going to join us. Jonathan Atkin from RBC Capital Markets. He's a managing director there, and he's been awarded certain things for picking the right stocks in telecom. He was a number 3 stock picker as ranked by the Financial Times. He's previously been a policy analyst with the U.S. Congress, and also he is an Ironman. So I don't know if you've been jogging and running on the beaches here in Waikiki, but congratulations on all the above. Another panelist will be Joe Ziskin. Joe is VP of Corporate Strategy at IBM, and he joined IBM also in 1997. So we've had a couple of really reliable long-timers here on the stage this morning. He's currently the VP of Corporate Strategy there and works on shaping IBM's overall strategy with respect to the trends that affect that large company, but particularly with respect to telecom. So with that, I think, there we go, like magic. So I'd like to invite up our panelists, and we'll launch into discussion. All right, Joe. All's good? All right. That elevator music as we climbed up was excellent. That's very appropriate. So let's talk about investments. I know that there's a couple of ways of framing the discussion, and I think each one of us might be able to bring a different aspect of it to the table. You know, I'm based in Silicon Valley, so I see a lot of what the venture capitalists are investing in. Each of you has a different viewpoint as well. I think, Joe, you see a fair bit of the VC activity. And Jonathan, you bring in kind of Wall Street and what institutional investors are looking at. So maybe not the ventures, but what large companies and large investment areas are attracting investment. Why don't we let you guys introduce yourselves, frame a bit about where you're coming from, I guess, with respect to looking at investments in telecommunications. And if you'd like, you can integrate your overhead elements as well at this point. Joe, who was first and who was second in the overhead aspects?
Yeah, so are there slides or?
I believe they're queuing up slides, if you'd like to use them.
Yeah.
I think they're right there.
So I'll step up there real quick.
So Jonathan's slides first.
So my name's John Atkin. Just to have 2 slides to present, basically. I'm based in San Francisco, work at RBC Capital Markets. My focus is telecom services, and that includes the carriers. So that would include satellite companies, mobile operators, fixed line operators, and an area that I would characterize as broadband infrastructure. So tower infrastructure, and that increasingly is focusing to varying degrees on small cells, which has come up in numerous forums, including the last one and a couple yesterday that I noticed. And then IP infrastructure, which would be data centers, where there's been massive investment given the amount of capital required to build a new data center, as well as moving further up the stack into web hosting, cloud services, and the like. So I cover kind of all of the above, mostly U.S. listed companies, but a couple that are domiciled in Europe, and then quite a number that are active in Asia Pac. So in a nutshell, the operating trends and also my own investment picks tend to favor the broadband infrastructure players over the actual carriers, and what data centers, hosting, and some of the mobile infrastructure plays like towers and distributed antenna systems and small cells all have in common is that they're technology neutral, they're application neutral, and they all benefit from some of the trends around data usage that Cisco's done a very good job of quantifying and forecasting. And as it pertains to most of these companies, there still is a very favorable demand-supply imbalance. There are some exceptions by region, by city, and so forth, but that has kept pricing trends quite healthy for the most part. And then, not to get too deep into the weeds, but some of these companies, American Tower would be an example, and CyrusOne and Equinix are other examples of companies that are recently converted or are converting to real estate investment trusts, and that introduces a new investor base that can own these stocks and is often quite helpful for the stock performance and the valuation. Asia Pac is definitely the region where we see the fastest growth, some of the most active investment, and also the highest pricing for operators that are already in some of the established markets. So let me just kind of, for the sake of brevity, move on to the next and final slide, really. Some quick observations that I'll throw out there just to kind of stir up the pot around M&A and financing and so forth. And last year, if you look at the top M&A deals in the overall economy, not just tech, but carriers kind of dominated them. And I listed these: SoftBank, Sprint Clearwire, T-Mobile, Metro, PCS. And then further down, but still I think a $2 billion transaction with Zayo AboveNet on the Metro Fiber side. So telecom, an area that kind of dominated or had a very leading role in the M&A landscape. A lot of the other transactions that we've seen have been carriers acquiring data center assets, usually with an idea of offering not just co-location, but managed services and hosting. So I've listed a few examples there from the last few years. And then there's been other either investments or M&A transactions, joint venture arrangements that have been entered into with an eye towards geographic expansion. And so I've listed examples here: Equinix, Telecity, Digital Realty Trust is another example that I left off the slide. Financing has been quite active, particularly in the data center space, given how capital intensive this sector is. Some have gone public. Just last week, CyrusOne completed their roadshow, and I think they priced or started trading earlier this week. And then you've got a number of private operators that have done substantial financings in the private equity market or in the debt markets, amongst them Global Switch and Telex and SoftLayer. Cross-region, what we're seeing is a lot of investment from the U.S. to emerging markets, principally Asia Pac and South America, where Brazil would be probably the number one target. A lot of this is driven by the need for cloud providers to provide lower latency to their end users and therefore a better experience. And then you often have U.S.-based multinationals that are customers of companies like Digital Realty Trust or Equinix or others, where they want to establish a foothold with an existing vendor in Asia. Often Singapore is the first choice, and Hong Kong is not far behind in terms of where the U.S.-based companies tend to want to locate, and hence where a lot of the data center construction is taking place. And then Asia to U.S. in the other direction, what I'm noticing based in just north of Silicon Valley is a lot of demand on the part of Asian telcos to establish a presence on behalf of their customers, whether it's a gaming company or a cloud computing company. They'll come in under the rubric of an NTT or a China Telecom or a China Unicom and establish a foothold initially on the U.S. West Coast and then elsewhere. So with that, I'll turn it over to Joe.
Great. Thank you. Over to you, Joe.
Thanks. Coming from IBM, we look at the marketplace and look at technology and investments across a broad spectrum of domains. And fundamentally, we start with looking at the infrastructure or the operating environment, move into the platforms, and as they're evolving into the services and applications. And as we look at that, we are constantly looking at what are the opportunities for us and the threats to our ability to deliver value or create value for our customers, the enterprises of the world. And as we look at this, we see more and more that networks, compute, storage at the core infrastructure need to be in turn enabled with investment through looking at the services that people are consuming and the way they're consuming. We hear a lot about mobile, social analytics, cloud, data, and the promise that that brings and how that's really changing the game. So when we look and spend a lot of time at thinking about where the money is going as well as where the technology is likely to head. So if we think about it from IBM, we look at the macro trends, truly what is happening and is shaping where the money is going to be flowing, where spend is going to happen. And as we've looked at over the last 20, 30 years, what we have seen is kind of a real shift relative to the percent of GDP that is being spent on IT. And this comes at, you have to get down below a lot of the numbers to recognize that a lot of it has to do with, the constructs around Moore's Law and that, it's better, faster, cheaper. We constantly are improving our ability to deliver a certain price performance each year to the point where, the companies in the industry have to sell more and more technology, more and more capacity, more and more capabilities every year in order to remain flat. So what we see is that as this kind of levels out, and we've seen sort of the adoption curve play out here where there's a lot of money being spent on automation, then through the Y2K bubble that we saw a tremendous amount of money being spent as a percent of GDP to address that issue, to then some disillusionment and now into kind of a stage where we see not just the percent of GDP being kind of leveling out as far as what IT spend is, but also the kind of the mix between the growth markets, the higher growth markets and the more mature markets, the Western Europe's, the US and Japan versus, the markets like Canada or like China and India, Africa, Latin America, where the growth rates are much higher. But what we see is the dynamic kind of plays out that, hey, what we're going to see is a trend towards moderating around or kind of coalescing around GDP growth for the IT industry, where we're going to see that instead of growing at multiples of GDP, we're going to be seeing that it's going to grow at or a little below GDP going forward, even taking into consideration the mix between the market spend in the growth markets ever growing at much faster rates. The percent of GDP in those markets is spent on IT is much less. We look at the VCs as well. So we look at the macro trends, and then we try and look and see what is going on in the venture community to see what's coming next. And these are ones that we see playing out, and I think is fairly consistent with what Derek sees and other players in the VC community. But it is around this construct of looking at the world's becoming more instrumented, it's becoming more interconnected, and it's becoming more intelligent. The construct that we call Smarter Planet. There's really an observation of what is occurring. So as we see this, plays where cities are trying to serve their constituency and position themselves in the global market relative to being able to attract capital, improve quality of life, and operate efficiently. We look at it from the perspective of the opening up and having to drive from an enterprise perspective as well, and from both the B2E or B2 within the enterprise as well as looking out to the way you serve your customers, so how enterprises serve their customers, being able to deal with a wide spectrum of different technologies. And then we look at it as social is really impacting the way we play or the way we reach out and touch our customers. The construct around being able to collaborate differently, being able to have a direct connection that is always on or 24/7 with your customer, that be able to drive insight around all the data that is connecting or that is created through these interactions becomes critical. Mobile is a prime driver of all of this as it plays out, as mobile is enabling us to have those relationships. It's enabling us to collect and generate the data that we can in turn drive insights. So we see, we look at the trends that are going on in the VC community. We scout heavily in the Valley as well as in other markets. We see the trend relative to the investments, while still dominated in the U.S. and in the Valley, is kind of changing. There is more investments around, in given markets in India and China that we see really coming up, but it's still kind of very much a U.S.-based view. And then we kind of look at this, what is happening from a technology perspective. And the whole thought is as we've looked at history, is from basically calculators or tabulation machines up through the thought of being very much the idea that we can run our businesses and automate processes and be much more efficient and global in the way we run our businesses, to this thought of we need to have a different construct around how we solve problems of the future. The whole construct of how we think about the problems, if we go to and think about how we're going to solve the future problems relative to the amount of data that's being generated, the amount of connectivity that is being enabled, we need to change the paradigm. The amount of compute that will be required to do and solve some of the problems requires us to think differently about those problems. And we talk a lot about cognitive computing, and we have this program around Watson that many of you have heard about in the U.S. We put up against the Jeopardy champions, where it's very much a deterministic, sort of a very intelligent way to look at problems and come up based on a corpus, a set of evidence being built around that, and learning that can help make decisions in a far more efficient, more effective way with a higher level of confidence. So as we see all this playing out, we see investments being made in various different ways, and as we talk about the whole approach of storage, compute, and network coming together, it's no longer thinking about data centers in the traditional way or compute in the traditional way. It all kind of plays together.
All right, great. Let's do a little Q&A and talk about some of these subject matters. My first question I'm curious about is, way back we would have things like Bell Labs doing a lot of the heavy metal innovation and invention about telecom technologies, and one of the criticisms that I hear in Silicon Valley, and I think is unfounded, but I hear people say, we're not investing in big things anymore, we're not investing in infrastructure anymore. And I think it's just that they're blind to the fact that we're distracted by investments in Twitters and in social network startups and things like that, because that's what's happening in that region around us. But it's not to say this big iron investments aren't taking place elsewhere, right?
No, we absolutely see that the advancements continue in what we spend and the research we do around the silicon, around looking at how do you design and get down to the perspective around chips and continue to drive the performance there. We see in the networking market, it continues to push the envelope. One of the important parts now is that we see the need not just to invest in faster, better, cheaper chips, lower energy, et cetera. It comes down to it's far more of a software problem. We have to change the way we think about the problems in order to get the benefit out of it. A great example is if I sit here and I throw a ball out into the room and somebody catches it. That construct, a human brain can handle and not even think about all the different aspects and variables that come into play in that ball flying through the air and somebody reaching up and catching it. For a computer to do that, we need to think about it differently without filling up rooms and rooms and rooms with compute power. And then they'd still only be able to handle one use case, one device, one arc, one speed.
John, what's your take on, getting back to the original ideas, who's making who's doing the big R&D these days for telecom?
Well, just briefly on the prior question, I would say that with a Pro Bowl here in town, Joe's analogy about catching the ball is particularly apt. I think I don't see the infrastructure players as really investing a lot in R&D other than incremental advances in power and cooling technologies and modular data centers. And as it pertains to the big telcos, I think they're leveraging the advances made by the Junipers and the Ciscos and the Alcatel-Lucents and so forth. So they're purchasers they're purchasers of innovation and off-the-shelf products rather than really driving the envelope.
So that sounds like we're then talking about a lot more companies as well now. It's not just, so the spin-offs from the PTTs, the Bell Labs, which spins into Alcatel-Lucent, so to speak now. It's not just Alcatel, Ericsson, but you're also saying that Cisco's and Junipers are entering into it, and a lot of the companies that are here sponsoring it, PTC and President, are also doing innovation, so it's distributed a lot more?
Absolutely. So it could be applications that are riding principally on mobile networks that create a stickier customer experience.
So it's no different than what we see. What the communication networks, what the internet and mobile has offered to businesses, other industries where barriers of entry have fundamentally fallen. I think relative to development, barriers of entries have fallen around different aspects of the market because it's software that's not as capital intensive.
Right.
One thing though that we do see is that there is, and I think will continue to be, a lot of investment around nanotechnologies, a lot of around exascale technology, scaling not just up and out, but in relative to that market. And the need, therefore, to have a very capital-intensive model kind of shifts away. It's like you look at a foundry today. A foundry is enormously expensive. You have to have enormous scale. So what happens is companies come together to build those foundries so that they can take advantage of the scale. When you look at, from a design perspective, you don't have to have nearly the capital investment that's required.
And the reason I ask about R&D first is because among the types of investments, this is kind of the invisible investment that's taking place in a company's investing in itself and in the future development of technologies. So in Joe, in your presentation, you talked about the kind of the investments I see the most, which are VC things. So let's flip over to kind of the Wall Street question and say, what is smart money looking at right now? What are investors who maybe aren't even telecom people but coming to you for advice and stuff? What are they ended up saying? Yeah, that's an area I want to put my money into.
I think at a broad level, to the extent that a portfolio manager has time in the day to think about individual companies, much less sectors, they're all generalists, but what they read about every day and what they tangibly perceive in their day-to-day life, smartphone usage, tablet usage, their kids, families, relatives, and so forth, how do I play the growth in data? And so, initially you think about the carriers, you think about the folks that provide the pipes, the folks that provide the endpoints of the pipes, the folks that are making the equipment that goes at those endpoints and on towers. So that kind of gravitates them towards a lot of the sectors that are represented here at the conference.
Very broad then, still.
Yeah.
So you mentioned towers just in passing there. Let me ask you, how is the tower sector? Because it was really hot for a while, carriers were selling their tower assets into tower owners like American Tower in the U.S. as a consolidated this real estate asset essentially, and that was a hot space for a bit. Is it still hot, or is it shifting away?
I'd say it sports the highest multiple, even higher than the data center group. Even though the growth organically is maybe 7-8% same store growth per year, but the asset expansion is definitely happening, and so there's two flavors in which that's taking place. One is through heavy emphasis on distributed antenna systems and small cell architectures. Crown Castle's a company that's really kind of placing its bet there. And then American Tower and SBA, the two other listed companies, are expanding overseas. And so Brazil, India, Africa, places where there's not just necessarily mobile usage growth, but what I tend to look at is 3G penetration. 4G doesn't exist in a lot of the world, so it's really 3G penetration being only in the low 20% range in a place like Brazil, a lot of growth left, and then when 4G happens, that'll just provide extra growth. And so the carriers are, in many of these geographies, they still own the infrastructure. They're looking to sell it as a way to generate some cash. And they'll find many buyers amongst either existing tower operators or others that want to enter the sector.
Mm-hmm. So one of the perennial solid investments anybody could make would be to buy spectrum rights. And there's always when a company takes part in an auction and wins the rights to a spectrum, there's often speculation whether if it's a new entrant, do they ever actually intend to deploy? Or do they just want to find a way to sit on this spectrum until they can later resell it at a pretty good profit? And there's Next Wave is an example of a company in the U.S. that sat on a lot of spectrum for a while, eventually can resell it. The cable operators in the United States were potentially going to be cellular operators, ended up selling their spectrum largely to Verizon. So whether that's a deliberate investment strategy or they wanted to be but chose not to in the end, is spectrum still a solid investment? Because it's paid off for everybody who bought it and then sold it later on so far.
Well, I think that if you go back and look at sort of some of the spectrums, is particularly in probably the initial 3G spectrum auctions in Europe, really kind of hobbled the operators. They didn't have the ability to deploy. So not everybody benefited to the degree. Now, if you look at it today and say, where is it positioned today? Yes, they're very well positioned because of the spectrum they owned. But did it actually generate the rate return on the capital that was deployed is another question. And you always have to look at, well, what was the alternate use of that capital? Could I have gotten a better return?
But the UK spectrum auction was definitely an outlier globally.
So in the US, and you talk about people who sit on it, well, certain regulatory bodies say, if you don't build out next time, you lose the rights to it. That's one thing. So they're getting more at it. It will have value as long as governments view that there is that auctioning off spectrums is a good way to raise money, right? So if you look at it from that perspective, it is driven by the regulatory market. If the regulatory market or policy shifts in a given market, then that investment can become very tenuous.
So, I thanks for the answer.
Yeah.
If you own spectrum in the right band, it's incredibly useful from a mobile usage standpoint. I was a skeptic that Clearwire had a particularly valuable asset in the mid 2 gigahertz range, and I don't think anybody saw SoftBank coming in and seeing value there where nobody in the U.S. really, other carriers, Clearwire tried to sell that asset to other carriers. Nobody was interested, but you had SoftBank, which had experience operating the very same flavor of WiMAX that Clearwire had operated at, and was going after the same flavor of LTE, and had experience in that spectrum band, knew how to deploy a network in its domestic market, and is evidently going to try that here in the U.S.
So that's twice kind of you brought up the SoftBank spring, and you talked about some other international activity, and we see AT&T is currently rumored to be shopping for some kind of a purchase in Europe that they could use to broaden diversify their ownings as well. Rumored to be KPN in the Netherlands, but this tendency to make these larger players to make investments abroad, is that a trend we're going to see a lot more of?
Well, if you look at from the perspective of we need to drive growth, our shareholders, so you have to look at who owns and what is the model in which the network operator sits. It really kind of will push that. Going international is a very good path for finding new markets, new growth. I mean, if we look at it as always, you have a couple of choices. Either you expand who you serve or you expand what you deliver. And most of the operators are looking at, domestically we're looking at how do we expand what we serve or who we serve from that perspective, not who we serve, but what we deliver to them. And then when they look outside of that box, they go international. International is still and has historically generated inconsistent or not a definite return. You look at all the players in the U.S. had extensive international holdings in the 90s and all got out of them. Right? And now they're going back because the growth in the U.S. is going to plateau, and they need to find
odd then though that they're SoftBank is making that investment in another developed nation, and AT&T is making an investment in a highly developed nation as well, that they're not going to some greenfield where they can really see a lot of growth?
Well, it drives to what is their competency, one, and two is what business model do they operate under? What is the expectation of their shareholders? Yes. And how does that play from that perspective? Is it, can AT&T, or let's take it out from AT&T, but can an established player who has a very mature business model and a very defined set of expectations by their shareholders take off and shift and say, we're going to go after something else. We're going to go after a land grab as opposed to a revenue.
It's back to Tim's map originally this morning where he showed where Eritrea basically has is AT&T going to bring a lot of core competencies if they go buy spectrum in Eritrea? Right. Probably not an area where they can bring a lot to the table, right? So our audience here at the PTC is largely made up of people that are doing business deals in terms of interconnects, and they're talking about undersea cables and satellite transponders and the like. So I mean, I'm relatively distant from what kind of investments are taking place in those kind of infrastructure. How many satellites are going up and things like that. But so I can talk Silicon Valley all day long, but it's tough for me to talk about that. Are you guys watching it all? What kind of thing, these kind of core and these interconnects and these undersea cables? What's going on there?
I think undersea cable, there's recent technology developments that have kind of been able to extend the useful life of the assets, improving the throughput. But they do have a limited life, and at some point there's going to be a replacement cycle. Satellites, much the same. Average satellite is designed to have a life of 15 to 20 years. Yeah. And so what you find is it's a fixed cost model. They're basically free cash machines, but then every decade and a half, they spend billions to refresh the constellation. Video, I'd say, is video and government usage are principal drivers of that investment.
Bob's points about latency being so critical going forward. Does that make investments in satellites seem like they might not have the payoff that was expected as latency becomes more and more important?
You can go, but not all services have the same requirements. So there are certain locations where satellite is maybe the only viable option, and two, depending on the various different types of services that he laid out very clearly. I mean, you go Satellite can serve some basic services very well, but then as you go up, you need different types of infrastructure. And what we look at from that perspective is really as we deploy our service delivery models, we have to be very concerned about what the bandwidth is and what the latency is. So we look at it from, okay, first is bandwidth, then there's latency, jitter, packet loss. All of those things come into consideration when you look at this. And then it causes you then to have a strategy on how do I deploy my infrastructure? Where do I deploy my infrastructure? And that's so from a very interested observer, we look and follow what and where capacity is deployed, but we're not an active participant in that market.
And to your first point, there's service diversity, so these satellite investments may not serve the role they were originally intended for, but video may shift towards the satellite, for broadcast use, and of course, all these Pacific Islands as they are good candidates for satellite connections.
When you get your cable signal at home, it goes over satellite,
Yep.
And so it plays a key role for terrestrial video, and then maritime, aeronautical, and government usage. You're not going to find cable to cruise ships or jetliners anytime soon. So there is a big market there, and expectations when you're on the open seas and in an aircraft for broadband are increasing. So,
and with both of the just previous presentations, when you talk, the United States is not monolithic relative to the availability of broadband, wireless or fixed. And as you look at that, it's just, there needs to be coverage. If the policy of the government is universal coverage, you have to reach everywhere.
Yep.
That puts challenges. And you can look around the world, everywhere is like that. China has a characteristic, so the eastern seaboard is very different than the west.
Yeah, and everywhere is such a massively different challenge than most places. Like cover 80% of the population, that's a very achievable goal, but cover 100% is a whole different ballgame in terms of cost per person served. John, you mentioned you started going towards the direction of when we shifted to satellites and undersea cables, of opportunity to extend the usable lifetime of these and actually extract a lot more revenue from the investment. So are you seeing that happening very often, where a satellite that's put up with an expected lifespan of 15 years, undersea cable with expected value of 30 years is being, hey, by layering on some kind of wave division multiplexing, we can get X throughput more than we expected and further the life cycle?
Easier to do with undersea cable, very difficult to do with satellites.
Right.
So you have to just develop a smarter app or a better user interface to get through or get past the latency and throughput limitations.
They're pretty difficult to upgrade the hardware on a satellite ultimately, though, right? It's short of a spacewalk. Well, for maybe Elon Musk's SpaceX, we can get commercial service and go up and play with our satellites. But until then, I'm interested too in what areas we think are, globally speaking, are the hottest in terms of telecommunications investments. And I've seen some maps showing the BRIC countries really hot. Is it the countries that were deficient in Tim's original maps that he put up? Is that where the investment is going?
Well, if you look at the investment, in certain markets, the investment will be part, again, of kind of the government policy of trying to drive growth, trying to attract more capital. You need, higher, more advanced networks. When you look at it from the ability to drive the economic growth in quality of life or societal services, there will be investments there. The scale of the investments are different. And when you look at some of the growth markets, they don't have the legacy, so they don't have to deal with that end of the investment and the kind of renewal. So you'll see lower levels of investment, but it doesn't mean the capability that's being deployed is any less than what you'd see in mature markets.
So I think we have a couple of minutes. I'm willing to take a question or two from the audience, so I don't know if there's a microphone available. There is the back. So if you'd like to raise your hand, we can potentially take a question. I'll shift it back to our home field, to Joe, and talk about the kind of investments that are taking place in Silicon Valley. And repeat, a lot of things, like you mentioned, smart cities, I think is one of your options. And one of the things that I find interesting is that these things don't need to get looked at as silos. Like smart cities, when you say that is an area that's hot for investment. I think Cisco is active in it, among others, and a bunch of companies. But that is M2M, and that is cloud. So these things all interact. Like these investments, an area gets hot, not by being a hot silo, but by being tied into a bunch of other hot areas.
Well, you asked about the smart money on Wall Street. With the smart money, Wall Street is have you aligned your business model and what your expectations are with the returns that you're generating. How are you deploying that capital? Will it come back in a very predictable way? When you talk about the hot money is more on what is the promise. We're not looking for a direct return right now on this. We're looking to establish the foothold, to find some sort of exit if you're a venture firm, and as you kind of pound through that. So if you look at the fact that where will the money be made in M2M? Well, we know that for the most part, machine-to-machine solutions take on sort of an industry-specific perspective.
Yeah.
And even within smarter cities, there are sort of verticals in there, whether it be transportation, public safety, utilities, et cetera. So it is one that you can get after and kind of drive towards. It makes sense. One of the nice things about cities is their objectives are very clear. They don't vary much. You want to attract investment to drive economic growth, to improve the quality of life of your constituency, and do it as cheap as possible.
So let me tie those together in the way I was thinking. So if smart city, well, that uses machine-to-machine, a bunch of sensors placed all over the city, some input, some output, like controlling street lights. You're going to gather phenomenal amounts of data from all these sensors and things. So you're going to need big data and cloud services to host them. You're going to need a data center. You're going to run analytics on top of that and pull out a whole lot of information. So we might, we talked about every one of these, not today in this panel, but throughout this event, talk about every one of these things. Analytics is hot, but you see that all these hot things are actually part of the whole cauldron that's really coming together.
You have to get that whole model, which makes sense to everybody, but then when you get to the point of saying who's going to make money at it, you got to look at always look at what problem you're trying to solve, and if you can really understand the problem that you're trying to solve, you'll probably be able to make money at it. And what we see is a lot of these things, there is no problem.
Yes. So we got one question we can take, and then we'll wrap up.
Actually, the question is interesting, but even more interesting than the question is how it arose, which is, Joe, I took a photo of your slide, tweeted it, got a response back. It's tweeted it over Wi-Fi, got a response back over Twitter, and I'm using a wireless mic to ask you the question. But basically, so that's sort of a hybrid multi-mode network architecture. But the question from Twitter is, the slide that you had showing the ratio of global IT spend to GDP growth, is there a comparable slide for telco or communications industry spend, or is that incorporated in the numbers?
What we see is that's specifically to what's defined as the IT world. When we expand it out to the ICT world, it doesn't change much. And what you would see is that there historically was an aspect, a growth in the communications market that was greater than GDP growth in a given market, which would lead you to believe that over time, the percent of spend was growing faster or increasing as a percent of GDP. And we see that reverse sort of towards the beginning of the millennium. And it will continue, and it will flatten out as well. And when you look at it and say, well, what about all the wireless markets that we've seen grow and sort of spike up? And that is very consistent with it, because other aspects of the market have declined. And now what we're seeing is once you hit that plateau, that peak, it will slowly slide down. And we see once you've hit the penetration rates, once you start to bring in appropriate levels of competition, you see the cost per whatever the measure you want to take is decline, and it gets to be very much along the model of what we see with, say, the server or the network or the storage market is you have to produce more and more every year, sell more and more every year just to remain flat. And that's what we're seeing in, you have to deliver more and more megabits, more and more voice minutes, more and more whatever you want to measure every year to remain flat. So then the question is where do you go from there? And you have to look at the slices within the industry to see where the opportunities for growth are. And that's what we spend a tremendous amount of time, is always looking at what are the slices. We've talked about them. We've talked about mobile. We've talked about the impact of social, cloud computing, analytics. Software-defined networks is a real hot area right now within the operator community because of the promise that it says we can get more capacity for less cost. We can get higher quality for less cost, and it drives down that side of the equation as their traffic continues to skyrocket and their ability to charge for it is still constrained.
I think we got we got to move towards wrapping up because I got the sign a couple of minutes ago. So I would like to thank both of you very much for participating. I think I see why they put you as the anchors here of the conference to hold everybody here until the very end. Thanks a lot.
Thank you.